Let's connect with Ashish Gupta. He's CIO Axis Mutual Fund to understand a little bit more about the outlook in terms of top trends as well as where the market could potentially be headed. And I think the question then on everyone's mind, Ashish, is the fact that we've had this terrific run up already, what the rest of the year really holds in store, and whether or not these valuations that our markets are commanding are justified.
Hi, good morning. No, I think the market has been responding to what has been witnessed in the economy. I think the economic recovery has been very strong over the past 2 years. If you see the GDP growth numbers, consistently they have surprised for the past 4 quarters, and there have been upward revisions both to GDP and corporate earnings. And I think we need to see the move in the market in light of that. If we see broader market, the market multiples have not actually gone up, but the performance has been in line with earnings. And that is our expectations as well going forward for the year, that if we get the 18% earnings growth that is being forecasted, the market should continue to deliver good returns.
Okay, fair enough. That should perhaps be the outlook for the markets. But let's, nail it down to some individual sectors. And in particular, given the fact that you have the elections, I think the CapEx-related theme is very much in the spotlight. How do you see that story really playing out, Ashish?
Yeah, so I think the market has recognized that after a multi-year downturn, we are seeing upswing in capex. In fact, it was started with the government stepping up capex, and clearly now we see plans of private capex coming through across multiple sectors. Whether it is power, whether it's automobiles, chemicals, etc. Again, we have seen a big deleveraging of corporate balance sheet, and the expectation is that the next 5-7 years will again be a deleveraging cycle for corporate India. While multiples for many of these companies have moved up, the optimism is really grounded on the fact that
Right,
we are.
Ashish, I'm so sorry to interrupt you there. And apologies for that interruption. Ashish, please do go ahead with the point you were making.
Yeah. No, so the point I was making is that we are still in the early part of the capex upcycle. So while multiples of some of these companies have gone up, the confidence stems from the fact that it's a multi-year cycle. Typically, these cycles last for 7-8 years, and we are probably in the first couple of years of the upturn. And I think, notwithstanding the elections, I think it is just the capex cycle per se that has turned around and should benefit these companies.
Okay. Meantime, let's also understand then what you believe could be the long-term outlook for the PSU space, because it's sort of divided when it comes to opinion, that there is now more steam that will continue within the entire PSU space versus now concerns cropping up, reports talking about how you should be looking now instead at the private banks, if that's the sector in particular. But how have you read into the movement that we've witnessed within the PSUs?
I think the fact is that the PSU space had got significantly derated over the past decade. It was an outcome of what happened in the previous cycle. If you see ROEs of PSU companies from about mid-teens, about 14-15%, they had collapsed all the way down to 4% or so. And the re-rating we have seen has been on back of the improvement in ROE. So if you see the PSU ROEs from about 4-5%, we are back to about 12-13% ROEs. And this is reflected in what returns PSU banks are also delivering. Additionally, these banks have cleaned up their balance sheets as well. So the NPA levels at these banks are really at a decadal low. So I think there is significant reasons for this re-rating to happen. Many of the banks are also no longer losing deposit market share to private sector banks. and we are therefore optimistic on PSUs. Having said that, I think over the past year, private sector banks have underperformed. There have been some concerns on deposit growth and NIM pressures on these banks. But the good news is that now the liquidity in the system has started to ease over the past month or so. So some of the liquidity tightness that was visible in December and January has started to ease. And I think these will start reflecting in the deposit growth that private banks see, and should help private banks come back as well.
Any concerns that you see going down the line when it comes to the overall earnings growth, or do you believe that the scope for earnings growth continues to remain owing to a number of factors?
I think while the drivers of earnings growth are mostly in place, I think the only part is really a external growth. So I think the global growth continues to turn weaker. I think one part that has surprised in the global economy has been that US growth has held up very well till now. While whether you look at China or Europe, there has been a immense slowdown. And I think the concern is if US growth also starts to moderate now, some of the global drivers of growth will weaken, and that may reflect. On the domestic growth, I think while the drivers are in place, the only thing that we need to watch out for that expectations are now higher. Over the last 4 quarters, as I mentioned earlier, every quarter post earnings, the forecasts have been revised up. And I think given these higher expectations, the cost of an earning miss will be actually much higher. So the margin of safety is definitely lower now.
All right. So if you had to nail it down to a couple of sectors, then where is it that you're seeing the long-term potential when it comes to the Indian market? Which are the sectors that you advise investors to bet on to capitalize on this up move?
Sure. So I think one part, in addition to capex, is manufacturing. I think there is significant long-term tailwinds that are getting established there. We are also quite positive on consumer discretionary, primarily segments like autos, real estate, tourism-related companies. I think additionally, after many years, given the positive government policy initiatives, power and infrastructure are also looking good.
All right. Let's also understand what you believe are some of the key growth drivers down the line. I mean, there has been a lot of focus on infrastructure improvement, digitization, where we've seen technology at the forefront. Where will be that next sort of area where you're seeing alpha growth?
I think really manufacturing is one area that has been underrepresented in India's growth story over the past decade and a half. The growth had been much more led by consumption and services. So I think coming back of manufacturing and the industrial part of the economy is really one big driver that is changing. And again, because it is coming from a low base, the potential for growth is fairly large. Consumption broadly, while some of the discretionary consumption segments have been quite positive, I think we have seen the broad-based mass consumption being modest over the past 12 months. My view is that as now inflation trends have moderated, and particularly if you look at core inflation, that is well within RBI's comfort level, you will start to see improving affordability in the mass segment as well. And we are hopeful that in the second half of next financial year, you start to see a pickup in mass consumption as well.
Okay, it's interesting actually today, Ashish, that we've got our guest editors in the studio and they'll be charting the road ahead for the entire consumption space. I just wanted to get in your take. Do you have any comments on where consumption is headed, the rise of the affluent class, the premiumization trend, anything in particular that you would like to hear from the likes of Sunil D'Souza?
I think the premiumization trend is very, very visible across sectors. And actually, we have seen, as I mentioned, even if you look at auto sector, or for example, the premium part has actually already been doing well. I think key that we need to watch out for is when does mass consumption also start to participate more in the growth.
When does mass consumption surpass the overall growth? Ashish, it's been good having you. Thank you for taking time out and joining in.